moving right along, and we had a little intro from Gil. We got Robert Bose from Sintana Energy. Sintana is also looking at opportunities in Namibia and has interest in Colombia. Obviously, Colombia has been a long-standing international onshore success story for producers listed in the Canadian markets. So with that, I will pass it on to Robert, and we'll dive into Santana.
Thank you. For those of you I don't know, as Adam mentioned, my name is Robert Bose. I'm the president and a director of Sintana Energy. And in the first instance, a heartfelt thank you to the whole Echelon team for hosting us all today and allowing the Sintana to participate. And we certainly appreciate everybody's time this morning. This afternoon. Next slide, please. I will leave you all to peruse our disclaimer at your leisure, but just to set the table a little bit. Sintana is a TSX Venture OTC QB listed oil and gas exploration company that's focused on creating a portfolio of exposure to large resource outcomes with limited additional capital required from us. Not dissimilar to Gil's strategy, we look to identify opportunities early, provide resources, be they technical or financial, to mature early stage opportunities, and then put them into the hands of people that have both the technical capabilities and balance sheets to deliver success. We are very much focused on this from an oil and gas exploration perspective. And as you'll hear about over the next few minutes, we've got a deep bench of strength with a lot of experience in executing transactions like this over a long period of time. So that's kind of the strategy and kind of what we're trying to do. Again, just to set the stage a little bit more with respect to the cap table, there's 390 million shares outstanding. So roughly on a fully diluted basis, 100 million market cap Canadian. I would note that we ended Q1 with approximately $5 million in cash on the balance sheet. This is more than 3 years of cash G&A. So we've got kind of a long runway, again, you'll hear about in the next few minutes. Given our current portfolio, we have no capital requirements upcoming, and we are certainly fully funded. I would as well note that in a financing that Echelon was good enough to lead for us in March of last year, we issued approximately 90 million warrants that are struck at 25 cents Canadian. Pleased to report that those are currently in the money. And given the number of exploration catalysts we have between now and then, when they expire in March of next year, we would expect some or all or a material portion of the $22 million Canadian to arrive on the balance sheet by the end of Q1. So certainly fully funded with more capital we expect en route. In terms of major shareholders, Charlestown is a family office in New York. We have been investing in the exploration business for close to a decade. Just as a related matter, we're actually a shareholder, I think, in all of the public companies presenting today. So we're certainly very grateful to all of the management teams for all the progress they're making on their businesses. Santana sits in a vehicle together with those investments called Charlestown Energy. We became the cornerstone investor in Santana in 2019 and continue to be extremely excited to provide capital and leadership here. We think it's got a tremendous near-term future. In terms of other relevant shareholders, Grisham is a private entity which is owned by our Namibian partner in a transaction I'll describe for you further in a few moments. He received approximately 34 million shares in Santana, is one of the largest shareholders of the company. And then insiders, approximately 12%. And then just to unpack a little bit, this cryptic major shareholders bucket, this is what I would call friends and family of ours. These are people we regularly invest with who joined us in the financing last year. So between all these constituencies, we are on top of, over 50% of the stock. It's been nice to see the stock react a little bit to some very significant developments in Namibia, generally speaking, in the Orange Basin and in our blocks in particular recently. But we feel like it's still very early days. There's a lot left to do here, and we feel like this remains a tremendously attractive attachment point, a point for the stock. So why invest in Sintana? I mean, just to kind of hit the punchline, Sintana is the only public vehicle that provides exposure to the heart of Namibia's Orange Basin on a carried basis. No one has the combination of positions in licenses with carry that we do. And, as you heard from Gil, it is the hottest exploration geography on the planet. It has the potential to be the world's next great hydrocarbon province. And we really, as you'll see in a few minutes, are located right at the center of the action. We've got multiple catalysts on deck over the next 4 to 6 quarters, any one of which would be a company maker. So many shots on goal, no further capital required from us to get to those finish lines, at least with respect to the existing portfolio. And, as I alluded to earlier, a tremendously experienced management team. I mean, beginning with our local partner in Namibia, Knowledge Katsi, Knowledge, in addition to, as I said, being one of the largest shareholders of the company, a fellow board member and leader of our business in Namibia, has been a longtime entrepreneur there. Knowledge founded an offshore company called UNX, which had a number of licenses. That company was sold to a Brazilian company called HRT. It's $700 million or something like that, and around 2012, 2013. So a very strong track record there. The CEO of Santana is Doug Manor. He was one of the founders of Cosmos. And, in our longstanding asset in Colombia, demonstrates our ability to originate opportunities early and then bring partners into there. We are partnered in Colombia with Echelon. So as I said, we've had an asset in Colombia. The company has had predecessors going back to kind of the mid 90s, but in 2012, it was significantly reformulated to focus on Colombia, where we had many licenses. Today, we maintain an interest in a single unconventional joint venture, as I said, where we are partnered with Exxon for an unconventional opportunity in the Middle Magdalena Basin. But as a result of a transaction we completed in March of last year, the sort of center of gravity, certainly the locus of value, has swung dramatically to Namibia, and we can talk about that a little bit more here. In Namibia, we maintain together and through our partnership with Knowledge exposure to 4 offshore licenses and 1 onshore license. We were introduced to Knowledge in the early summer of 2021. And we were extremely attracted to many things about the opportunity to partner with him. The portfolio that he had that we ultimately stepped into provided a level of diversity, which, we had been sort of thinking hard about, having experienced the realities of very concentrated risk in exploration, single basins, single discoveries, single operators, single countries. We were keen to diversify the platform a little bit, but not change the overall return potential that exploration brings. The portfolio that Knowledge put together provided the diversity that we were looking for. It was diversified onshore and offshore. In the offshore context, in the Walvis Basin, which Gil elegantly described, as well as the Orange Basin. And in the Orange Basin, proximity not only to the only commercial hydrocarbon discovery to date at the time in 2021, the Kudu gas field, but as well to 2 very exciting exploration prospects, which were still events on the horizon when we entered into our agreement with Knowledge, specifically being Venus and Graph. And so today, in addition to having an in-country partnership with him through a number of entities that he manages, we retain interest in all of these licenses. So to sort of narrow the aperture a little bit to what everybody is, certainly who follows the exploration business is focused on, which is the Orange Basin in Namibia, just to unpack a little bit our exposure there. First off, we maintain an interest in PEL 90. This block sits immediately above Total's developments at Venus and Venus West, now called Nara. When we were initially introduced to Knowledge, this block was operated by Tullow. Tullow exited this block as a result of not completing the final step of the first exploration period, specifically being a 500 square kilometer 3D seismic shoot. So they exited this block in January of 2022. We subsequently farmed out to Chevron, and we can talk a little bit about that at the moment. It's currently operated by Chevron, who's got an 80% working interest in this block. Secondly, we have an interest in PEL 83. This sits immediately above the blocks where Shell is prosecuting its discoveries, including the Basin opening discovery at Graf, as well as Jonker and Lerona. This sits immediately beside the Kudu gas field. Galp went through a long process to try and farm this out, had very significant interest, but as a result of sort of the emerging developments in Basin and improving insights from a geoscience perspective, is going to proceed with an initial exploration program, which we'll describe in a few moments. And we, through our local affiliates, maintain an interest in Pel 83. It is home to some of the largest in-basin prospects and is a really exciting block. It's in much shallower waters in certain parts. So the potential kind of commercial prospects here are very exciting should we arrive at those finish lines. And lastly, we have an interest in Pel 87, which sits immediately above Pels 90 and Pel 83. This is home to the Saturn superfan, which I'll describe again in a few minutes. This block is operated by Pancontinental, an Australian company. Earlier this year, Woodside entered into an agreement which required them to spend or to complete a minimum 5,000 square kilometer 3D seismic shoot in order to earn the option to become the operator of this block and proceed with some exploration drilling. And so they are in the throes of that. And, as I said, no one has the kind of exposure in the heart of Namibia's Orange Basin that we do, partnered with these operators. And as I said, there's no further capital required from us to get to some of the near-term finish lines. So just to sort of unpack maybe, and there's a lot on this slide, to unpack a bit of the kind of the time sequence, we closed our acquisition and our partnership with Knowledge in March of last year, and the intervening period's just been tremendously exciting, as Gil has described. In the timeline below, you'll see certain events identified in blue. Those pertain to developments on our 3 blocks. Above in black are the developments in progress on the Shell and Total blocks. So as I said, we were introduced to Knowledge in June of 2021. We entered into an agreement with him in October as a result of just a fairly protracted process with the TSX and the Commission. We were unable to close our transaction until March. In the intervening period, Shell had its discovery at Graf, which opened the basin, and then the Venus discovery occurred 20 days later, was announced 20 days later. And since then, we have continued, as I said, to see very significant progress. One of the commitments or sort of things that we told people we were very focused on during the financing we did in conjunction with closing was getting, the blocks farmed out where there was not existing farm outs. As I described, we were able to successfully bring Chevron back into the country through Knowledge's efforts. They had been in country a few times before. They actually found the Kudu gas field in 1974, but they returned to Namibia through their entry in Pel 90, where today they are the operator with an 80% interest. In consideration for that, they made our local affiliates and us, by extension, a small upfront payment. They as well carried us on a $40 million 3D seismic shoot, which was entirely coextensive with the entire block. They've shot almost 6,500 square kilometers of 3D seismic over Pel 90. And they are in the throes, all of the local partners are in the throes of analysis and integration with a view to developing and high-grading a prospect inventory. In March, we were able to announce that Woodside had entered into the option agreement that I described earlier on Pel 87. So essentially there, they were required to make the 3D seismic shoot in order to earn the option. Should they choose to elect to trigger that option, they would take up 56 points of the license, 55 from Pancontinental and 1 from us. They would carry us on 1 exploration well. Both Pels 90 and Pel 87 contain bonus mechanisms which would allow us to stay with further activity should there be discoveries. So we are certainly carried for a material period of time through the initial exploration efforts here. And around us, there's just been very significant progress. As Gil talked about, Total is very active on its block, spending half of its 2023 exploration budget on its blocks immediately south of Pel 90. Shell has applied to drill up to 10 wells on its block. It's had multiple discoveries. Gil talked about upstream. I think there was an upstream article around the time of a flow test on one of its wells that was titled "Like a Train." So they've seen very good progress on their blocks. So we have just been extremely pleased with not only the developments on our blocks, but as well just the in-basin level of activity. Looking forward, this timeline is entirely illustrative, so I'll just make that qualifier. But we expect a very busy and exciting kind of 4 to 6 quarters here. Just to run through the activity on the blocks, and I should just note all of the activities in the purple rectangle require no further capital from us or our local partner. And so on Pel 83, Galp entered into a contract with Odafell, I think it was about a month and a half ago, for a deep sea semi-submersible rig called Hercules. This is currently in Norway en route to Canada, and then we'll be in Namibia in late Q3, early Q4. The initial contract is 115 days for 2 wells and testing. And so the expectation is that Galp will initiate exploration activity, drilling activity, sometime in early November. As I said, it's a 115-day contract unless the option is extended. And so we would expect results from the Galp efforts on Pel 83 sometime early next year. On Pel 87, Woodside entered into its agreement in March. I think they had completed a upsized 3D seismic program over the entirety of the Saturn superfan, like in less than 2 months. So that has now been completed. They are fast tracking together with the local partners the analysis and integration. They expect results to be available by the end of the summer, so let's call it late August, at which point their option would become effective. They have 180 days to trigger that option. But as you might expect, drilling tends to follow seismic. And so we would expect, again, subject to rig availability, that they will be on the block drilling wells beginning early next year. And again, just to reiterate, Pan-Continental actually carries us far beyond the initial exploration period, but the Woodside agreement would allow ourselves and Pan-Continental to stay with at least 2 exploration wells. I described Pel 90. Chevron has been doing a ton of work together with our local partners on sort of basin level modeling, integration and analysis of the acquired 3D data. It was shot over the entire block. There's extremely exciting prospect inventory here. And again, no commitments, subject to further consideration and determination by the working interest partners, but the expectation is they will be complete the analysis and integration by the end of the year, with a view to be drilling early next year. And again, our agreement with Chevron provides us runway on at least 2 locations. So again, we expect an extremely exciting 4 to 6 quarters in basin, and we are sort of free from any capital requirements to get through the efforts that are shown on this slide. So just to provide just another perspective, I guess, on why this is so exciting to us, certainly, and hopefully to others, it's just the sheer scale of the opportunity in Namibia. If you look, for example, at the Saturn superfan, this graphic on the right, we graciously borrowed from Keith Hill at Africa Oil. But the Saturn superfan, located almost entirely in Pella 87, the Woodside block, is a 2,400 square kilometer subsea feature. The Venus fan, home to Venus 1, is 1,000 square kilometers. If you compare that, and admittedly there's no linear transformation between aerial extent and necessarily recoverable barrels, but as a barometer of the potential. If you compare that to Jubilee in Ghana, which is one of the largest producing fields in offshore West Africa, Jubilee is 180 square kilometers. And Marlim in the Campos Basin, one of the largest fields there, is 150 square kilometers. So Saturn is 15 times the size of each one of those, and 7.5 times the size of both. I mean, just the scale of the opportunity is truly breathtaking, and we're very much looking forward to the emergence of the potential over the next few quarters. And so just to provide the other leg of why we're so excited and so grateful to be where we are. We, as I said, invest globally. We invest across the E&P spectrum. And we have the benefit of extremely exciting investments in many companies. But the confluence of potential in terms of sheer scale, as well as activity, on the block shown in the graphic in the right, there may be more wells drilled here over the next 12 months than have been in the last 5 decades. This confluence of potential and velocity exists nowhere else that we've seen. And in terms of creating a portfolio of optionality, it really provides just a unrivaled opportunity. And so this is, in a nutshell, why we are so excited about what's ahead in the Orange Basin in Namibia. So just to make sure we don't leave out our other favorite child, Gil did a fantastic job describing the Walvis Basin. We as well have an interest in a license there. Pel 82 was previously operated by Exxon. Exxon spent over almost $21 million on this block. 70% of this block is covered by 3D seismic data. HRT, which is the Brazilian company I mentioned earlier, has drilled a couple wells on this block, Marumbe and Wingat. They confirmed the regional extension and presence of oil-prone source rock from the Kudu Shale. Samples were taken from these wells. They were extremely high quality, light oil, kind of 38 to 41 API. And so notwithstanding the fact that much of the excitement is a little further south in the Orange Basin, we are extremely excited to have this additional leg of optionality in the portfolio. And as Gil mentioned, a lot of interest here to farm in and have people look, and we will continue to progress our efforts to find a partner for Pel 82. I think we've sort of hit the highlights on the management and the team, but as I said, a very experienced and diversified team with very specific relevant experience as it pertains to our strategy. So I think we can probably flip to the last slide. We really feel like it's the right time. It's the tremendous opportunity we've got ahead of us. Many people hard at work, and we're really, really excited. So thank you everybody for the time, and we hope you'll join us as a shareholder. I think that's it, Adam.
Thank you, Robert. Let's jump into some Q&A. First off, I'll ask the same question I asked Gil. You guys have great exposure to a large resource potential, but non-op. What is the overall strategy from the company? Do you eventually want to stay with the projects and eventually take production, even though that production still might be, quite a few years out? As guys get through exploration and then a development plan? Or is the idea to transform an exploration success result into an M&A transaction, sell off the remaining interest, and then move on to the next opportunity?
I will, as I tend to do, just kind of steal some lines from Gil, because I really do just want to be like him. But I guess I would say a couple of things, Adam. Like, it's not lost on us the scale of our company today. I would say that it's certainly from a family office perspective, and I think at Santana are in the value maximizing business. And so if the strategy to maximize the value of our assets is to be able to stay with them, we would certainly consider it, but it seems hard to contemplate given the scale of our company and the potential scale of these developments. Like, just as an example, the phase 1 Venus development could cost $10 or $12 billion. That's bigger than the GDP of Namibia. These are huge developments, and it just seems hard to contemplate. We have relatively modest interests in these blocks. So I think the idea is to really create and participate in the exploration and discovery value, and then probably look to monetize. But again, situation specifics and value should always govern what we ultimately do. But I think the idea here is really to deliver exploration style returns by participating predominantly in kind of that phase of life.
Okay, great. Question from the audience. There's nothing mentioned on the land block in Namibia. What's happening there?
So again, we tried to, just given time today, really focus on where we see the most amount of excitement and near-term trajectory. So yes, we do retain an interest on an onshore block, Pel 103. It's located not too far from kind of the ongoing exploration efforts. That was a 5-year license that has very nominal work commitments. And so we really are just kind of holding that, kind of pending the onshore developments and kind of seeing what happens. It costs us virtually nothing to maintain. There has been actually some interest to maybe do some stuff with that block from external parties, but at the moment, we just have it in the inventory, and we're meeting our commitments, which are very modest, and kind of letting the onshore story develop before we really figure out what to do. And needless to say, we've just been so focused on the offshore blocks, particularly in the Orange Basin over the last little while, that it's just trying to focus bandwidth where it's most productive.
Understood. And maybe a related question: what's the plan near term and kind of medium term in Colombia?
Well, that's subject to some discussion, and I can't say too much about it. There's an ongoing process there. We've had that asset in Colombia for over a decade. We've been in partnership with Exxon on that asset. They're very good partners of ours. They have been partners with Knowledge in Namibia, and so we're sort of working together to find out what makes sense. I think you alluded to it, Adam. This country has had a tremendous history of a very significant and material hydrocarbons business, and a lot of that came from Canadian companies, or Canadian domiciled companies anyway, and that to some degree is kind of how Santana was reformulated in 2012. The current complexities in country really sort of complicate what happens next. And so I think, together with Exxon and Exxon's relationship in country, we're trying to kind of figure out, what we can do to sort of best preserve value there. We are extremely convinced about the geologic prospects of that block. And for people in the audience who followed the story, Exxon drilled a single vertical well on that block. It was fully cored and logged. It returned hundreds of feet of oil-thick shale. It too is like the Eagle Ford, going back to Toby's talk. It's really just trying to understand how to take that geologic opportunity, given the overground complexities, and put it on track for something to happen. And it's sort of a difficult time at the moment to really understand how that happens. But needless to say, we're working hard with our partner to figure out what to do.
Okay. Another question from the audience: why didn't Santana buy the remaining 51% from Interoil?
In order to preserve the structure of the JOAs and some of the mechanisms in the JOAs, including the carry, there could not be changes in control. And so we structured the transaction to preserve Knowledge's control of those licenses and the entities that hold them, so as not to endanger the terms of the JOA. So,
okay. Over back to the offshore stuff. What value enhancement is Woodside doing on their 3D seismic shoot? Given that the Saturn fan's already essentially been kind of outlined.
Well, the Saturn superfan was fully mapped by Pan-Continental, but overlaying that with 6,500 square kilometers of modern 3D seismic is a huge leg up. The data quality that has come back from the Woodside shoot, we understand from them and our local partners, has been very good. So it gives them much better visibility and precision into kind of the geologic opportunity. I think as well, all of these efforts are trying to better tie basin-wide discoveries. So acquiring lines which better align Venus, Graph, Jonker, Lerona to some of the prospect inventory on these blocks is a key part of any geoscience exercise in the basin at the moment. So, Woodside shooting a modern 6,500 square kilometer 3D seismic shoot over the block just dramatically enhances the level of visibility into the prospect inventory and the precision with which they can sort of begin to high grade and identify where things are.
Right. And then obviously this area has really started to pick up in terms of the activity levels. Any concerns around maybe some delays in some of the timing that you've outlined, just given securing rigs and access to services?
Absolutely, that's always a prevailing concern. I mean, I guess I would say a couple of things. One, Galp has already contracted for the rig, so it's nothing's ever a certainty, but that's already been contracted for, and they've been planning on and working with the service providers on this opportunity for some time. So we certainly feel good about where that is. Chevron and Woodside, as to their rig acquisition plans and how that works. I'm not privy to that. Maybe to some degree unfairly, we kind of believe when you're Chevron or Woodside, you have good access, and there may just be constraints on availability. But I do know that given the way in which they are endeavoring to execute the geoscience, spend the capital, and move at once efficiently but thoughtfully. Like, they are very focused on getting to these timelines, we think. But yeah, it is certainly subject to slippage for sure.
Okay, great. Well, thanks, Robert, for taking us through the Santana story. Very interesting, high impact potential here.